Hi, good evening, Vivek.
Hey, good evening.
Hi. So we'll start, okay?
Yeah.
Um, so welcome to HPA Weekly, and in here, what we discuss is what happened in the market and what could possibly happen next week in the very near term future. So, what the market currently is in a no money environment, absolutely no money. It tries to go to hard money and it gets slams every time. This has been going on since late December or so, and it still has continued. So, before going to the breadth and momentum, which are both poor and has been oscillating in the oversold level, has not even come out of that zone. So, before going there, let me quickly comment on what the indices look like. So the two indices which generally I see or the Nifty mid small is mainly what I personally focus on. But let's look at what Nifty is doing. So um, my hope was that this level, this level, which was also supported by the AV WAP here and then here, uh, the hope was that it will work as a good support. And although it supported, then had a bounce, and then now there is a very nice downtrending channel being formed, and you can see that we already have three touches at the top of this channel. At the support of the channel has two touches already, and there are numerous channels, numerous touches in the center of the channel, and so this looks to be a very um, significant channel in my opinion. And I mean, the best case scenario would be we get a bounce from here again somewhere till here, and that would not amount to much because these are counter trend bounces. Uh, of course, I mean, this is a good scenario, but I don't see that happening right now, very likely. And the worst case is that we can actually pierce this and go to the lower end of the channel. So this is last week this time on here on February also the message was that uh, there was a the anticipation of the counter trend bounce was there, but also be open to something worse. And by something worse, this is what I meant. And Nifty has not done anything, even though the general market, which is the small and mid caps, did give us like a 2.5 day, 3 day kind of a bounce. So this is the real worry for now in the short period of time.
Prakash, hi.
Yes.
Sorry, quick question. So the upper line, right, of the
G.
channel,
This one, yeah.
can that be treated as resistance?
Yes, 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 yes. And this is now
So, I
now
mean,
become
I was,
a
I don't know,
uh,
sorry, I read somewhere that the more times a support or resistance is touched, the weaker it becomes.
see that is in case of something like this. For example, um, say say there is a base like this, right? And and the price action is something like it goes up, it takes resistance, comes back, goes up, takes resistance again, comes back. So what
Uh,
happens is every time
so
the
in
price,
continuation patterns, it makes more sense.
yes,
Yeah.
yes, yes.
Okay. Got it.
And in here, like every time the price goes there, whatever supply is being chipping away, it's like that ambuja ka cement wala advertisement mein dikhata hai na, every time it hits the wall becomes less and less stronger. Yeah, so in this case the context is slightly different. um, so I believe this is a strong resistance now. And yeah, so let's look at what the mid small cap is doing. um, with every so this was a counter trend bounce, and this was a like a really tradable bounce. It actually, so even then my idea was that the 1021 will act as a resistance, but that resistance was taken out very fiercely with this gap up, which means that okay, we are here to like continue slightly. After that, each counter trend bounces has only been 3 to 5 days long. Okay, so in this case, it was 3 4 days long. In this case, 3 4 5 sort of 6 day. It was a big of sell off. In this case, 1 2 3 4 fourth day, and then there was a small up leg which was again very weak. I was at least hoping that this would go till 20, uh, 1 2 3, so 2.5 days. So this morning it again, I think by 10:30. So yeah, by 9:57 things started to move bearish. So we can't even call it half a day. So 2.5 day, 2 day bounce. Now it is definitely possible that, because we are still making higher highs and higher lows, okay, on a daily. So yesterday was a higher high, higher low. Today is also a higher high and higher low. So I'm not saying that the trend, the up bounce has finished, but looking from breadth and momentum, it just is so unlikely for me to say that. Matlab, I have not. There is absolutely no uh, a momentum in the market right now for me to say that, oh, this will go on and at least challenge the this downtrend line, or the 20. Okay, so that's why my bias currently is that I think this is end of this counter trend bounce, is my view right now. And that is why my general bias is that, hold on, yeah, my general bias is that the downleg will resume now. Okay, again, I may be wrong, but from whatever I have seen, that's the bias currently I'm holding. Let's look at how the actual uh, trend and momentum plots look like. See, the net 4% after putting two positive days on 19th and 28th, 21st today, again almost came back to zero. Like after this premature jump 9:15, everything got sold. Not a good sign. The the trend, the market trend is down, like a 200-day also down. We still don't have even a similar low. Percentage above 50-day moving average also, it started to go up, and now it again looks like it could continue the downtrend. Percentage of stock above 10 DMA started to come above the oversold zone, but I mean, above 50 is what I say it's slightly tradable, but it's way below that. And if you look at the percentage of stock above 20-day moving average, it still hasn't come. So the bounce is actually like so poor. There is no momentum at all. Now, what about momentum? Now, if you look at Landry plot on the daily, hold on, this is weekly. Like it's languishing at the absolute bottom. So the comparison I want you to see is that the last tradable rally, which was from November 25th to about December 10, 11, 12, you can see the value itself was at least like above 50, starting to trend up from that region. So around 50 stocks were on a momentum. So currently we are below, like right now 20. So it's like a really poor momentum on a daily time frame, and that would be for swing. For positional, there has been absolutely nothing. Like that's why I say that positionally, just stay away, people. Even for swing traders, it is almost like a no money. So positional ke liye to even worse. So you can see the number of stocks on a positional time frame, on a weekly time frame, which are in a momentum, is now 63. uh, Even during yeah, so we are getting bad. So only once this guys start to put up, that is the time to again get fiercely, um, get back in the markets. So we have absolutely no momentum, trends still down. No need to discuss the sectors and stuff. So like I said, anticipation is that of the continuation of the down leg. So how am I doing? I am mostly trying to do intraday trades here and there from the strong start list. Positionally, I'm still nil. Swing trade, I initiated a swing trade yesterday, which was SRF, and it just saved my stop loss by I think 0.2 or something, and I will discuss this trade a little later. So I'm just holding one stock, um, and yeah, a very small stop loss. All right, so let's move to Gyan section, and this is going to be really quick. And I want to discuss uh, a little bit more on some other things as well. So currently, what is the highest priority you can do? The highest priority should be to not take uh, to trade less. I as a beginner, I am very I mean, for especially for beginners, I'm very torn to give them the advice, don't trade, because I know that if you lay idle, uh, then whatever things you have sort of learned, the practice you have done, it might go away. So that is why nibbling here and there, trying here and there, is staying active is actually essential for a beginner to progress. Okay, that is why I don't explicitly tell people that hey, like, just stay away, because it's also necessary to have this experience of a bear market, which for me was the 2022 market, right? And so that's why I'm saying no. I don't explicitly tell don't trade, but trading extremely small size whenever you are is essential for the mental side of things. And if then still trading even with low size, this is a very good time to bring your risk management to your fore, and limiting downside should be an absolute priority, right? So that means that definitely not holding things below your SL, and definitely not chasing something really higher. And I'll give you two three examples, and I will also show you my SRF example, by what I mean by that. Okay. uh, so lastly, before I go to charts showing all this, I just want to say that things are really looking grim currently, and that's why assuming the worst can still come, should be in everybody's minds, and don't be surprised if that happens. Okay. So if you can stay away, not trade is good. If you're trading cut size, and limiting downside, risk management is your top priority, right? And when I say this, I always say that having a perfect entry will solve all of your problems. So there was a recent trade by a group member in Suvain. I want to highlight this. How like, so yeah, not Suvain Life Sciences, Suvain Pharma. Yes. So Suven Pharma was a decent trade, decent sort of a decent entry. If this base breakout was traded, this was a decent entry, right? So a decent entry of this would be, say, I mean, यहाँ तक चलेगा, 2.5 2.6% above the, I mean, the best would be very near to that, but even this is fine. But don't be chasing before that. And yesterday I had shown you uh, how and why, if you had gotten an entry here, your stop loss would have been still intact, as compared to if your entry was somewhere here. So the entry made was 227, and the stop loss was 5%, and that would have been clipped by this uh, what's this, retest. Okay. uh, a- if the entry was either on this bar, which was the actual breakout bar on a 25-minute time frame or a 75-minute time frame, even if the next two bars were taken an entry, 5% would have still somehow managed this one. And 5% is again not a right thing to do. The right thing to do would be to place a size smaller, and place an entry below this, even if it is more than 5%. And 5% still is a decent stop loss for for a like a swinger positional trader. Okay, so this is what I mean by perfect entry and how that will help your risk management itself. So please don't be chasing things in this environment, like absolute no no. The other example I want to give you is not Vedanta, actually Medanta. So see, Medanta has done really well in the last 3 days. Okay, so the perfect entry on Medanta was on this day, right? So I mean, this is a really nice structure. This is a big base apparently. I mean, this perhaps could turn out to be a big base, and an entry somewhere here would then be considered as a low cheat entry of sorts. Okay, this is a trend reversal entry. We were making lower highs. We are suddenly making now higher lows, and then this candle was the break of the previous high, which then changed the trend. And not just that, we also had a good bar here, then a very nice tight action here. So in having said that, this entry would have been the best entry. Okay, this was like a tightness breakout BBC sort of an entry, and then the next best day would be above this day's high here. Okay, both of these days would have given you decent stop losses for a swinger positional, for like 5% here. This would be even lesser, 3% or so. But an entry today is just not worth it, right? I mean, if you are entering today and having a 3%, like, I mean, I don't know if this level is such a level that has lesser chances to be taken out. It can just happen that your price will come back and retest somewhere here. This is the previous breakout zone, and then again go back, in which case this stop loss would not hold well. So these are the small things you have to drill down if you are a swing trader. Okay, if you are still trading in this environment. If not, then just wait for the time to get better, in which case even if you don't even if you chase stocks which are slightly higher, the market environment or the direction of the market will take your prices up, right? And the other example I'll give you is my the trade I took on SRF. So as you see that this this day, this three very tight candles uh, at the SMA 20 level was sort of the did sort of primed me towards, hey, there could be a low risk entry available here. Okay, and in general also this guy is a really big base breakout, has done this when the market has done that, right? So this is clearly a very strong, relatively stronger stock, which is now pulled back to a really low risk area, which is basically what we all want to do. The philosophy of my trading is strong stocks at a low risk area. So this was a prime candidate, and just to make sure that I get a good entry, I was watching this on a 25-minute time frame, and my level of interest was here. Anytime this sort of breaks out from this broader zone, and and after getting rejected from here, so early morning I could not follow this up, but after this guy got rejected, and then when this sort of candle was appearing, I got more interested because this was basically a very nice base, and this would be a pullback before the breakout. Very nicely also bounced back for the 5 DMA, and anything above the 5 DMA then in my opinion gives you a better chance. So then I quickly made a small entry here, and then when on a 3 minute time frame it was sort of bouncing back. um, yeah, so the moment, I mean, there was also a daily VWAP support here. Yeah. Again, this is too much. So yeah, so the moment the VWAP happened and went up, then I took an entry, and the subsequent entry, when sort of little more volumes came in, I took in, right? So Now, because that was my entry, I could then afford a very small stop. Okay, so my stop is somewhere here, like 0.5%, right? 0.5% on a 10% size is like very minuscule. This one. So even then, if one can dial it down to this level, then even a smaller, even a loss will not hurt your this very much. And because of that, I could I could be fine when this thing came. It basically came really close, but did not. Having said that, ऐसा नहीं बोल रहा हूँ कि it will not clip my stop loss, but uh, yeah, but if you are trading in a situation like right now, you have to be a little creative in finding this, and definitely not chase things. uh, uh, okay, so that is what I wanted to tell. Yeah, so another slide I want to just discuss with you all, and this goes slightly against the uh, against what is generally been floated around in our trading community or circle, in that risk management has been the the other what's the word, yeah, risk management has been put up on a very high pedestal for you to make money. And that is true. Risk management is extremely important, but really to make money, the hierarchy of what is important is actually different, in my opinion. So in my opinion, and in my opinion, you one can make money purely if one trades in a good market condition. Okay, uh, forget forget about anything else, the relative strength or the setup or the entry point or the sizing or the exit. If you can just time this, and by this I mean this, if you can just time this, if you can just time being in the market during this period versus and not being in the market during this downfall period, you, even if you don't know anything about RS, setup, entry point, risk management, you would still possibly be making money. Okay, um, so the next thing, in my opinion, then comes is that, okay, along with the good market conditions, if you then be in leaders versus laggards, right? So so some very famous laggard are HDFC Bank in the last bull market. HDFC Bank did not move. Kotak Bank did not move, for 3 4 years. Uh, some of the leaders who were in a downtrend are still in downtrend, like Alkylamines, right? So even if in a good market condition, if you somehow get into relatively weaker stocks, then you will not make money. How much ever risk management you do uh, on a stock like Alkylamines, you would have perhaps not made any money, right? And that is what I mean by the hierarchy. So the, this concept is absolutely important to ingrain in inside. So, and the flip side is, even if the market conditions are not so great, थोड़ा ज़्यादा relatively stronger stock में आपका पैसा बनेगा, right? And okay, fine, you market conditions are great, relatively stronger stocks you have picked up, but then if you pick them up extended, because the market structure is such that stocks do not move up unidirectionally for an infinite amount of time, it will pull back, right? So if you, even if in a good market condition, relatively stronger stock, if you buy something extended, then again you will have to bear the brunt of, I mean, you might still lose money, right? So then after these two things, the setup then becomes important. Now, setup and entry point, they are almost like interchangeable, in my opinion. A good entry point in a decent setup is like what I showed you just in Medanta, for example. So So this is a decent setup, and this is a good entry point, and those two will go side by side, like in this. So I mean, there are so many less setups right now. Just to give you example also, but you get my point, right? So if I pull up something like a Central Bank of India, when we were on an uptrend, central bank was one of the strongest stock last year and from 2 years ago. So if someone enters here or here when the stock is already extended from the perfect buy point, you will again give back a lot of the gains. And then when it after it again sets up, then again there is a possibility for you to make money from here, but not here, right? So this is what I mean by setup entry point. And then comes sizing and risk management. Now in a perfect market condition, you pick up a leader, you got in the right time, but you sized it with just 2% of your portfolio. So then what happens is, even if even if the even if that guy moves 50% from your buy point, your impact of the portfolio is just 1%, right? So then sizing does matter. And at the end, yes, I mean, sizing, risk management is again interchangeable. And at the end, exit, like, you perfect market condition, you get in a great stock, great timing, amazing entry, gajab size ke sath, and then you could not sell at the top or when it was coming down. Then also there is no use. So then exit is also really important. All I want to say is, just don't be focusing on just one thing, which is risk management. Okay, you have to focus on all of these things, and all of these things are equally important. And actually, the most important thing starts from the beginning. So if you identify the correct market conditions, then you don't even have to work so much below, right? And that's why the hierarchy. This is basically the hierarchy. So it's like the if you want to get a fit, uh, you want to get a fitter body. If you just go to the gym and do like bicep curls every day, like 5 sets of bicep curls morning, evening, and not do anything for the core or the lower body, then you will not be healthy. So that's an example. uh, right. So that is all. And at last, I will again reiterate this: manage FOMO. Markets will not run without you. The breath indicators will show up. Moving averages will start to stop falling, uh, go sideways, and then eventually move up. So that would be the time to get back as a trader, swingo positional trader. And by the time that happens, you can still engage in the market, but make sure you size less. Make sure you stay active, but size less, and get better in your risk management. Always follow the rules and things. I'll stop right here. I'll stop right here. Yeah, yeah. If there are any questions, so another thing I just want to point out, if your I truly believe that this RS 100 or RS 200, how many from the top you want to go look at. This is a really nice representation of the absolute relative strength in the market. And what I wanted to point out from this is, this is no fluke. The names which are here are no fluke. Okay, if you see every one, like 5 out of 10, 10 names will have some sort of fundamental or earnings related thing associated. So Blue Jet, which is at the top right now, you can see that the surprises were like 40% surprise, 13% surprise. A name which I do not like at all, UPL, is now at the top. And why? Because it had like a 1000% like earning surprise. A lot of them. Kemlin Fine Chem uh, had 53% surprise. So at the end of the day, fundamentals and yeah, results does move the market, and having a little bit of that backup definitely helps. Okay, I'll stop right here. there is nothing much to add, and I will take questions if you guys have any. All right, let's stop right here then. Thank you so much all for joining, and I wish you a good weekend, and see you Monday. Bye bye.